Uh, Welcome, Ebenov, September 12th, 2025, special session. How are you?
I'm good, man. How you doing?
Welcome back.
Thank you. Thank you for taking the time.
Sorry for the delay.
No, it's okay. Um,
How
yeah,
are you?
I'm
So,
good.
so you missed me?
Of course. Of course. You're the OG. God.
So you're telling me you're in a Discord trading room. You know our foundations, right? So
Yes.
what's this dude's foundation? What makes him good?
So
Is he like the main mentor, or is it all kinds of random people?
no, yeah, so he's the main guy, but there's a lot of really good traders in there. There's some guys from even from Goldman in there that are like up and coming and they learn from this guy because he's worked at institutional banks, he's worked at family office like investment companies. He was an options principal for 9 years. Um, and he's been doing like trading for 26 years. His foundation, I don't know what exactly is like his bread and butter from what I can tell though, is basically doing like equity. He'll do, buying shares and then he'll hedge them, whether it's, he's either selling puts to buy the calls or he's doing um, you know, his eye on options. He doesn't do enough options trades as far as I can tell, at least not right now. He's going through a course, a beginner course that he's doing for the group now. But most of his options he doesn't really share as much because people are still kind of confused about it. He does a lot of equity trades, and that's what I like because he does like day trades and swing trades. And he has like principles around like technical entry, but he focuses a lot on like the fundamental, the technical, and the macro as like the three pillars. Very smart guy. I think you would really like him. If you ever saw like some of his content, he's quite sharp.
What's his name?
His name is Anthony, but his trading is called Arte Trading, Arete Trading, Alpha Chasers. I'll send you his like newsletter.
Did he charge for you to get into the room?
Yeah.
What is the fee?
I think it's like a buck 20.
$120
Yeah,
to do what?
to be in the community.
Oh, okay, so it's like one time.
No, no, it's every month.
Okay, monthly, yeah.
Yeah, yeah, yeah. Because he's live every day. He's giving a lot of value, like a
Well,
ton.
selling the puts to buy the calls, that sounds like a cool plan.
Yeah,
Because
dude.
you're generating, right, one thing to do, kind of like when we sell the leap
Yeah.
to stack the monthly.
And he'll do that for like the hedges where you're like, oh shit, I'm up a lot. I'm gonna hedge this now. And then I'm just gonna like his main thing that I learned in swing trading that really changed it for me was let's say you're getting into a trade, right? Because of let's say a good technical entry. You have your stop loss 1 times average true range below. And once you're 2 times average true range from the entry point, like so if it's like 5 points below, you're up 10 points, move your stop loss to break even. You trim and you leave the rest to break even, you're done. Like you can forget about that trade. At that point, you can't lose money. And that's really cool because that first, and he always trims. I've noticed that if he does a trade, whether it's a swing or whether it's very rare where he won't do it, but generally the practice is if it's a swing or a day trade he's in, it gets eyes up a buck, he trims, right? Up a buck, he trims it, and then he's like, that pays for my stop at this point. And then he moves the rest to break even, or like moves the trailing stop loss up or something like that.
So it sounds like he's really controlling his drawdown,
He
and he's also
takes no
controlling
more
his
than,
exit.
yeah, his exit is like it. What I've noticed, and I was gonna tell you how I see some similarities in temperament with you and with him, because you're both very like this, like you're not like not to say you can't be excited or like I'm sure you both have your down days, but the very like even keel and like you hear in his voice he'll be like, okay, I'm in, cut, next. Like it's not like, oh my God, oh fuck, what did I, it's none of that. It's like
It's not like the Wolf of Wall Street movie.
it's like he's in and out. If it's like a bad trade, I'm out. Like move on to the next one. Like it's just, and then there's
Oh,
no friction, there's no emotional hesitation. I'm like, fuck, that's so cool.
so it's even killed like me. He's like a machine.
Yeah, and I noticed that both like it definitely takes a certain temperament to be good at this.
You know what? Someone told me like after so many years, like you getting.
Huh?
Someone told me after so many years, you get numb.
You get numb. I think that's what
Yeah,
it is.
it's like
You're
just
not
like
affected by it.
yeah, because like you've been doing so many damn roller coasters, like dude, this is just
I mean, that's the realest thing. I mean, for me, the last several months, it's been a lot of just learning to process with my emotions. Like, I haven't done that great in the market until, very recently now started to do well after we climbed out of that hole in April. Uh,
I saw Tesla going up. I thought about you.
right? Yeah, I know. We need to talk about that. Um, and so the biggest thing has been processing a lot of the emotions of like bad trades or like just bad moves or whatever went wrong, and then analyzing and then like learning from it and moving on. Like that's been the most challenging thing of this whole journey, I would say.
Yeah, good, good. Emotions is it's a weird thing because a lot of people, they demonize emotions,
Yeah.
and it's like the whole teaching is like, take emotions out of it, but we're emotional people, so inside we're like,
Yeah.
ah.
Yeah, like how do you become so robotic? And but that's kind of what you need to be. It has to be like robotic. These these movements have to be technical based or some like data point based while you're moving about, not just like, oh, I felt like it's gonna do this or I think it's gonna come back. Like, how do you know?
It reminds me of when you had your first girlfriend in school, and you like get that butterflies in your stomach,
Yeah,
and you do like crazy stuff,
yeah.
and then the fast forward, like you like for you, like you're in a marriage, you have like a lot of experience, and now it's like you like know how to handle it, you know how to
I see. Yeah,
process your
that's good.
emotions a little better.
That's a good analogy. I like it.
Um, so as Tesla started creeping up, I didn't call you or text you. I was thinking about talking to you. Were you able to move your leaps up?
My leaps are at 360, 70, and 80. And all of those are now in the money. And I'm like, fuck, now I gotta put these up. I actually
I
want to
got.
ask you this question, like just candidly. Like I I feel like I want to restart. Or maybe I'm not seeing the forest for the trees here, but I feel like I'm stuck in this trade, like where the share growth is creeping up, and then like the premiums for these options, like it's already like at 40-50% loss now, right? So it's like buying them back at a loss and then just sell it higher. I put money back into the trade. I get the share growth back. But I feel like I'm just kind of fucking stuck in this cycle right now. I don't know if I'm not seeing it because the time decay is there, sure, like whatever premium I collected. But now the value of that option is much more because it's in the money and stock went up and it's a short position. So I feel like I don't know if what I'm trying to say is like, I don't know. That's how I feel about this type of trade now. And I don't know if I'm not getting it.
Well, you're not gonna get the perfect trades. You're always gonna be able to improve. Correct.
Yeah.
Like for me, I have a 350 and a 550. Today I wrote a 550 for 10 grand
Wow. When'd you write that?
earlier today.
Oh, 550. Shit. Nice.
And I just put my monthly into a leap because I felt like this is a nice move. I'm gonna capture that move, get 10 grand from my leap 550, and then I have a 350 also, and I moved that one up from 300.
Yeah. Yeah, I was
So
much lower. I was in like the 280, 270, if you remember when we last spoke. So I've already moved them up quite a bit from that
you
point, but
didn't move them up. So
now,
that's something.
yeah.
You're still getting the benefit of the money up front, reinvesting that, and you're getting the benefit of being able to borrow that money, and but ideally you would like them to be a little higher. It's kind of what you're saying. You feel you're stuck in it.
Yeah, or I feel like maybe I need to just like find a way to exit this move, but then like stick with Tesla and just do the monthly CCs.
Well, well,
Oh shit, hold on one
there,
second. Hold on, sorry, one
yeah.
second.
Right, no worries.
Go ahead.
I'll get back to you. Yeah, as long as you have the shares and then option on that, you still have a positive delta. You're not short, you're long
Net
on the
long,
whole.
yes.
So you're gonna be okay. However, with this new $1 trillion package for Elon,
This thing's
and
going 1,000.
yeah, I was just thinking, we might be able to have a big move. So I would think about moving my leaps up now, or just like maybe buying it back and waiting to see if you can go higher. You know, at least maybe with 100 shares. And that way it gives you the opportunity to.
Right now, I know you're probably gonna think like I actually have three leaps and only 200 shares because I took some profit. In retrospect, too soon, but that took profit like 3 months ago. And I want to figure out like one of them has now become a strangle with my 390 put that I sold. Also a leap. That one's now coming into profit nicely and will keep giving me profit as this goes up. So I was actually considering that. Like, should I close maybe one of these that's naked right now or just add shares to it and then try to raise one to like you're saying, like 500 and maybe just close one completely?
Well, I close when I have a better position, for one. So you put that money in a better position, and then two, you can also close when you have a nice profit. If you feel like that's a profit mode, you close it out.
Is there a way to match um so let's say we have share growth of 50 points, for example, and I have that let's say the 360 put or the call that I've sold.
Let's just use what happened this month. Tesla 340 to 390, 350 points like that.
Yeah, something like that happened, and I had a 350 call that I sold on my share
Uh-huh. Uh-huh.
that I bought at let's say 340, which I it's about my price is about 340, 350 on some of these shares. So that 350 call is now in the money, and it's let's say it paid me 100 dollars or 10,000, and now it's to close it's 14,000, right? So I'm
Right.
40 points in the loss on the call to close it, and then I'm 50 points gain in the share growth. I was basically thinking like, is there a way to match up where you can buy to close and sell the shares at a price where they like break even or have a slight profit or less loss in this type of situation? So that way I can just like start fresh if I wanted to, so to speak, or is that not really happen? Because you're still net long on the shares.
Yeah, and it sounds like if you have a 50 point share growth and then a 40 point loss on the leap, then that's still $1,000 profit, right?
It sounds like that. That's what I would think.
But you can just do that manually for one.
How do you
Just,
do
you know,
man?
just close it. You just close one and open one. Like if you have a better position, just close it and open it up. Just close one and open the other. Just manually. You're saying to control your leap, match it up with your shares going up.
Yeah,
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 you can see the leap going into negatives, and then the shares going into positives, right? You can see that
yes,
on your
yes,
balance every day, right?
yeah.
I mean, and you said how to get out of it and start over. You can always get out and start over.
I know, but I want to do it in a way that's a little bit more tasteful than just like, okay, fuck it.
No, I mean like right now, look, like right now, you see, you go into Mr. Morgan's office and he says, "Okay, I don't want you to test your old positions.
Mr. Morgan's gonna beat me up. He's gonna
Sell,
fire my ass today.
sell everything right now. Go into cash. Okay.
Yeah.
Here's the lesson. Sell everything right now. Go into cash right today. Okay. And tomorrow, what positions would you open up? That's the question. If this position was harassing you or you didn't like this position, don't open that one back up. If you wanted to get over here, do that one. What I would do, I would do Tesla. I would buy the shares here with the upswing, and then right to 550 V. That's just I feel like it can go, maybe to 550.
Oh, you're saying
550
buying new shares here?
was it 550 or
Yeah,
four
because it's
or
almost at
450?
400. I think you
Um,
might have wrote the 450 for 10K. 550 paying 10K
450,
sounds crazy.
is it 450? Yeah. No. 550 December
27?
17th, 27, 826 days, $10,099.
Wow.
Price 101.
Wow.
You can double check that.
Okay, wait, so go back to what you were saying.
Um,
Buy shares and sell the
um,
or
It
buy
sounds
back
like
shares.
you wanted to. It sounds like you wanted to start fresh, at least in your
Ideally,
mind.
yeah,
Like reset. You can always
yeah.
close your position and open it back up. When you open it back up, you're opening the ideal position that you like.
Hmm.
Does that make sense?
Yeah.
I'm going to the max right now. 550. Yeah, 550 is paying 101 on the call. You can see that. Um, yeah, if you like to have Tesla shares at, for example, 390, what is it? Went up today, I saw it up. Uh,
It's at 395, I think. 396, rather.
and then write the 550 lead for 10 grand, then just do that and start fresh. And it like resets it in your mind. And that's energy, right? If you feel like you're fussing over this position,
Yeah.
if it feels better, just close it and reopen it. It doesn't cost anything, just $1 for the option fee, right?
Well, whatever the loss is, that's what I feel like I would need to just sort that out. Like, what do I close?
Again, like if there's a loss, had the loss. You already made the
I see
loss.
what you're saying. Yeah, you're right.
Just put it behind you and start fresh.
Yeah, I might end up having to do that just because I think it will help me mentally. Because I feel like when I look at it, it's not a huge, but it just feels like it would feel better to have a trade that I'm like behind and I feel confident about.
Try that at least one position, close it, and then
Yeah, I think.
open the ideal position right now for today. And that's what a trader does. He has to reevaluate every day. He has to take responsibility, take
Right.
accountability for his positions. If you're saying a loss, if it's a loss, it's a loss. Take the loss and then start over fresh,
Yeah, there's lessons in that.
and then put
This
it
guy's
behind you.
funny. He calls it tuition. You're paying the market tuition. Isn't it true? I mean,
I
all the
guess.
shit that you fuck up on or you think you did wrong, it's like, yeah, you got to pay your tuition. That's how you learn.
Yeah. And what other positions you have besides Tesla?
So I have similar to that. I have the Nvidia shares where I have 300, but I have like four calls that I've sold because I sold some shares. I want to do something similar there, but I'll take a look at the same strategy there. Other than that, the newer
Yeah.
ones is CoreWeave. Been doing good with that. Just sold some covered calls and short puts on that today. Made about 436 and 319, so about almost 800
Now
on that.
you notice that we're touching all-time highs, so it can go higher. The trend is gonna go higher now. September. This is the funny thing market.
September is a down month, but we aren't down.
The funny thing market will do. It'll teach you some new shit. Like,
Right?
and Powell's supposed to.
Cut rates next
Powell's
week.
supposed to cut rates next week. Some people say he might do 50% points.
Yeah.
Um, and I just think the market's already factored these things in. Can we
You
go
think it'll be
higher?
a sell the event?
I don't know, man. It's weird.
Maybe. It feels eerie, right?
If you pay attention to the bull market, it started in 22. So this is going to be going on the fourth year of a bull market, if you want to look at it like that, since COVID.
Yeah.
And if you look in history, the fourth year is always an up year. And we go to the fifth year.
Yeah.
So we might just go a lot higher. Screw September, you know. And however, look what I got behind me. I got the bear and the
They're in the
bull.
bowl. Yeah.
So if Powell speaks and the shit crashes by the end of the month, you respect that bull,
Yeah.
you respect that bear, and you're gonna wish you kept your Tesla leaps low.
I
And if
know.
we
Then
go
I'll
up
have to,
higher,
but then I'm gonna have to jump into the money again. And that's where I feel like I get the principle of the trade where you're going more short. But I feel like but then like maybe I'm just not astute enough to trade this at the leap situation yet. I feel I can manage the monthlies or the weeklies better for now. And the leaps
well,
are,
you've had some time to look at a trend, right? The
yeah.
the point is to be able to make a forecast. So write this down. Forecast forecast a trend.
Mhm.
Forecast the trend of Tesla. let's say 3 to 6 months. Don't worry about the market. Just look at the Tesla stock by itself. If I got a dude, that first came to me and said, pay me, for my lessons, and I asked him which way is Tesla going next 3 to 6 months, and I asked you, who has some experience, don't you need you be able to like have a better answer?
Yes,
So always try to forecast the trend, and then that's going to be where you're going to adjust your leaps. So if you think it's going to go higher, then move it higher. If you think it's going to go lower, then move it lower. If you don't really know, just leave it. If you don't really know. But if it starts creeping up, if God already told you we're in a bull market, we're going higher. Is it really going higher? And then the trend's going to be up, then you should just raise it.
I see. Yeah. So like, yeah, not be so concerned with like these single day moves where it shows your leap is now at a loss. That starts to weigh on the account, and the feelings come in. We started the conversation with feelings, you
Maybe
know.
you're a very emotional man, and you need to
I know.
put your logic ahead of your emotions. So here's the 6 month. Can you see this?
Yeah, it's going up.
So and I1Q just hit an all-time high today. Damn.
Great. Great
We
call on
just
that. I remember we were trading that stock at I think under 20
17,
bucks. Yeah,
17,
17, 18 bucks.
19. Yeah.
You were so bullish on that stock. I gotta give it to you that I did not keep all my eye on Q. I got out at 45, I think. But what a day.
Yeah, and it usually sells off these
Yeah, these
bursts of
pops.
enthusiasm. So selling a call is good for now because it can probably sell back down.
They're buying a company apparently. I think that's why.
Yeah, in Europe, in the U.S.,
Usually if you buy a
in
company,
the
you
way.
have to give up money, so it should come in, I would think, but we'll find out.
Well, you give up money, but you get more control, and you get it's bought a bunch of companies already. It has bought a handful of companies already. They
Oh,
want to be they want to be the main game for quantum,
yeah.
and the CEO is just gobbling up everything he can.
Did you get it on Oracle, by the way?
No,
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 that
did
was a
you?
crazy one. I've been buying some shares
I heard
after it
he, I
dipped.
heard it, like the guy Ellison topped Elon for the.
Yes. Yeah.
He must
So,
have a big portion of Oracle shares.
I mean, as the original guy, I would think he still does, yeah. And yeah, no, I've been buying on the pullbacks. I got 100 shares now. I'm looking to do some covered calls on it. I think it'll be hot for a bit.
Cool, cool, yeah.
I don't really like Oracle that much, but while it's hot, I'll play it. I learned the burning match thing from you.
Yeah, the burning match, it's gonna be hot, it's gonna go up, people gonna make money, and then
Yeah.
at some point it's gonna burn out.
Yeah, I'll be done with it. I'll short it. I actually shorted it really quick today. I don't know if you saw. This is the last thing I'll tell you. We can move on to the other topics.
Go ahead.
There was a news. This is why I like the community aspect of this. So there was news, Trump administration publishing something about COVID vaccines and like infant deaths. And a bunch of these pharma companies just took a dump right after that came out. And so this guy said, okay, cool. I'm looking at these three now. And then he put an alert that he's short. I was a few minutes late because I was doing something work or whatever. I saw the alert. And I was like, okay. I looked at the most expensive stock. So there was a $20 stock, like a $15 stock, and like a $90 stock. And I made a quick decision. I'm like, okay, the bigger it is, it's probably going to fall a little harder. So I shorted 100 shares of BNTX. And literally in like a minute or two, I was already in profit. I'm like, cut this shit, I'm done. I saw like the candle rust, I'm out. So it was just like a great quick profit. And I didn't follow up. I think it started to reverse from there. And I was like, okay, I'll come back to it if it breaks another level or something. But man, the rush you get, and then there was a couple other times recently where we shorted really successfully, and I was like, the rush you get from shorting is very different. I don't know. It's very different.
Yeah, you want to get the fuck out of there before you get burned up.
You're like, fuck this, I'm out.
Money made in a short time.
Yeah,
Yeah.
2 minutes.
And how are those companies doing now? Do they recover? Are they still going down?
Let me just tell you the one that I traded. I don't know about the others.
Give me the symbol. That one you said was 90.
ENTX. Bio
ENTX?
BNTX. Yeah.
BNTX. All right,
Biotech SE sponsor, whatever the hell that means. Actually, it went up. I got out at the perfect time.
there you go.
Yeah, I would have been down 6 points if I stayed.
Now sometimes there's other big money watching along with you. What they'll do, they'll start buying after a dip, creating that I want to say, control, and then that stops people from shorting. And then people get in like you, they'll kids will get back in, and then at some point they'll come back down,
Yeah.
and
Mm,
they start selling,
yeah.
because that's the smart money. They start
And that's
selling,
where we're
which causes
yeah,
another down.
that's where I'm learning, like looking at the certain candle structures, like you figure out what's the control bar where the price is rejecting, and like you start to see like, okay, at this level I have to watch. If it breaks this level, then okay, this is actually a reversal right now. Or is it really fighting? Okay, there's a chance it's going to reject. So if I am in a trade, I'm going to get the hell out before it hits this level because it's high chance of rejection. So like
Pretty
looking at
crazy,
those, it's pretty nice. Yeah.
pretty crazy about Charlie Kirk, huh?
Dude, that's made me sick to my stomach when I found out. I pretty fucked. I don't know what to think. It's pretty fucked.
A lot of people going down the conspiracy hole about that. And you mentioned the child deaths, conspiracy hole about that too. It's like we don't really know what's what, man. It's like we can't trust these
It
news
crazy
news
times,
people.
that's for sure.
All right, do you want to go into the butterflies and condors?
Yeah, that's what I wanted to understand more about is like the butterfly spreads, and then what are ratios with it, and like when do you want to use them versus, and then like and I think I know it's basically two credit spreads is my understanding essentially, but there's like
Yeah,
different.
so remember when I taught you like your first cover call and you weren't doing those before and and to get monthly income and you had that advantage over the regular shareholder who has the shares.
Yeah.
So butterflies and condors are an advanced trade.
Okay.
And doesn't mean it's better. It's better because it's advanced, but it just means that you have more options. Options give you more options. And
Right.
like with the cover call, what you're doing like with the cover call, you're trying to like have the world bend in your favor. Hey, look, I can have the shares, I can get money back, but what? But you always give them something. I'm giving up the upside, But hey, I can get $500 a month that can pay my bills. So we're using it for a point. We're using it for a reason, a purpose. We're going to give up our upside, but we're going to pay our bills monthly. You see, so it's a trade off.
Right.
So that you can think that like an advanced trade. It's really a basic trade, but it's an advanced trade. The butterflies and counters are the same thing. It's an advanced trade. It's not better or worse, but it gives you options and you give up something. For the most part, for the both, you're giving up the upside or the downside because you're trading in the middle. For both of those, you're trading in the middle. What it is, it's defined risk, right?
Defined
Defined
risk.
risk, which is very popular for traders, and also reward capped,
Say it again.
reward capped, capped,
Capped.
capped. Similar to how you're on the Tesla, you run the Leap. I run the 550, so I can get paid the 550. I know that's my cap. So if it goes beyond that, then I have a loss of opportunity. However, I got the 10 grand, so I'm happy with that. That's my trade-off. So the butterfly and the condor. Usually when it's a condor, it's iron, right down, iron condor. Condor.
Are they a variation of the same trade, or are they two totally separate things?
They're basically the same thing,
Okay.
but let me explain the difference. So
Sure, sure.
um, the classic is iron condor. The vanilla condor, people don't do that much. Iron condor, and then the butterfly. We'll discuss those right now.
Okay,
Butterfly.
perfect. Sounds good.
Now the butterfly, think of it like the shape of the butterfly. The middle you have the body, and
Body.
then the wings are top and bottom.
Yeah.
So you put the butterfly, you lay it sideways, and you have the wings top and bottom, and the buzz in the middle. So the butterfly, the first one, A, you have two strikes in the middle.
Two strikes
I'm
in the
sorry.
middle.
Let me write that. That's the one strike in the middle, but two options. One strike in the middle times two options,
Okay.
or yeah, times two options, or times two contracts. But it's a ratio of two to one. And then on top you have, so in the middle you have minus two. So you sold two. So butterfly is the middle is minus two on the middle strike.
Okay.
And then circle that. And that's the body of the butterfly.
Got
And
it.
on the top you have plus one.
Plus
In
one.
this case call. And on bottom you have plus one call. So you have two, and you have two, and you have plus two in the middle. You're selling two in the middle. You have plus one on top, plus one on bottom. Does that make sense?
Okay.
That's a butterfly. Two in the body, which is the same strike.
And the two in the body
One,
can be a call or a put, or are they both going to be the same?
they're generally both. Well, in this case, they're both calls.
So all three, okay, sorry, all four options in this case are calls, right?
Yes,
Yeah.
yes. In this case, yeah. In this example.
Okay.
So remember, like if you have a call down here,
Yes.
you can always sell a call up here, correct?
Yep. Yep.
So if you have three calls down here, and you can always sell three calls up here.
Yeah.
Now,
Okay.
butterfly and condor, you're putting two spreads together, technically.
Okay.
Right? Yeah, you're putting two spreads together in one trade. And the spreads in this case are you're putting a high spread up here and a low spread down here. You put it together in one trade. So let's use you want to do Tesla.
Yeah.
Tesla's tricky because it can go up, but
Let's pick something else then.
you know what I did I did a Condor on Roku. Pull up
Okay.
Roku.
I'm not familiar with that, but I'll open it up.
Roku's a little different because if you look at the 6 month, it's kind of trading in a range. It's more trading in a range. It's not going sideways. It's going up still, but
Yeah.
it's not shooting up like Tesla and
Sure.
Nvidia and Palantir.
So is that
So
a prerequisite for the strategy as
yes,
well?
yes, because you
You
want
want
it
it
to
to be
kind of maintain in the
consolidating?
middle. You kind of want it to maintain in the middle. You don't want it to shoot up or shoot down because you're gonna get maximum money if the stock stays in the middle. Oh, and by the way, both Butterfly and Condor, you're focusing on time decay.
Got it.
Time decay. That's your focus. You don't need the price to move. Am I clear?
Yep.
And that's part of the advanced trade is time decay. You're selling the option and you ideally want to expire worthless or you want to expire where it is. So let's do Roku, right?
Okay.
Also you can do Starbucks, but I don't think Starbucks will pay as much as Roku. Let me just post Starbucks right here to see what it looks like. It goes across nicely. It's more of a butterfly or condor trade. But people do condors an agent fucking thing. Yeah, look at this. So
Well, some of the
Starbucks is like really going across 100 and then it goes down a little bit. But this will be more of a candidate.
I've noticed some of these traders will do these condor or specifically the butterflies. They'll be doing these butterflies
It
even if
goes
the
up.
stock has gone up quite a bit, and then they'll do one to just like let it bleed out. I'm like, and I didn't understand, but so yeah.
Yeah, so let's just do the classic.
Okay.
So on Roku, you look at the price is
What we could be looking at? It's at 94.52.
94.52. Write it down. 94.52. So we're gonna sell 295s
What month? What
minus
week? What are we doing?
295. Let's just go 1 month
A month.
to
October 20.
that's kind of like my system go. People do 3 months a year, a week, do weeklies. But we're gonna focus on monthly, right? Same thing, same
17th
idea.
October.
Uh yes, 35 days. Perfect.
Okay.
We're on the same wavelength.
All right. So
And
we're
then
selling.
so the 95 you'll sell two is 520 by 5. Let's just say 525. So we're gonna get minus 295 equals plus 525 times 2 equals to plus 1050. So you get 1,050 right there. And technically, that's a
Two short calls.
yeah, short call.
Yeah.
That's like a naked call. But now what we're gonna do, we're gonna protect ourselves. We're gonna buy the higher call to cap our upside loss potential, and we're gonna buy a lower call. But keep in mind, we're gonna save some of this premium. This 10 points, 10, 50 points. We're gonna save some of this premium. So the higher call and lower call is gonna be well,
That's
technically no.
it has to be less than the premium you received, obviously.
Actually, so I'm getting confused. That's for the Condor. Cancel that. That's for the Condor. This the butterfly is different. The butterfly is going to be a debit spread. So right, debit spread, debit
Butterfly's debit.
spread. Yeah. So it's going to cost us to go in. So we're gonna write. I'm gonna give Roku some time to some movement. You look at the chart, right? You think where can it not go, right?
So hold on, before we move on, just to confirm, it's a debit spread, but in the
Yeah.
middle, we're still selling the calls
Yeah, we're still selling it to
in the
hang
middle.
on, hang on a second. Is that
Yeah.
right?
Take a second.
Plus one. Yeah, yeah, we're still selling it to in the middle. And you'll
Okay.
see because we're gonna pay a lot more for the lower call. That's why.
Okay.
But it's still gonna be a debit spread. So I look at Roku.
Yep.
I see it moving between 90 and 100.
Okay.
And I want to go a little lower because I'll make it a little bit um I don't want to I want it to stay within a range. So I'm gonna say sell the I'm gonna buy the 85 plus 185.
How many?
I don't just one. I don't think it'll go below 85. So plus 185 call. And that's gonna be 1140 by 1190. So let's say 1160. Follow me? Plus 185 call.
1160.
And on the top, you're gonna go also 10 points above to 105 by a 105 call. How much would a 105 call cost? Can you give me a quote on that? Roku
It's
105,
201 right now. It's between 192 and 201.
85,
Let's call it,
105.
maybe we can get it for two.
$2
Yeah.
plus $2. So what do we do? We spent $2 up here. We spent 1160
11.
down here,
Yeah.
and we're getting back 1050. So the total cost is
Wait,
what?
wait, wait. Are you selling the 105 or are you buying the 105?
We're buying the 105.
So we bought, so,
We have to buy it because we're selling the two middle ones. Make sense?
oh,
We're
I'm
selling
sorry.
the two middle ones. We have to buy up. We buy higher and buy
Oh,
lower.
I scratched the example. I thought we were starting from zero. So you're still sold the two short 195s.
Yes.
And
Yes.
against that, you're buying 185 and
Yes.
105. Okay, now I'm with.
Yes.
Okay.
And again, we're just taking basically two spreads and we're putting them into one trade. Higher spread and lower spread. In this case, you have a total debit.
And so wait, hold on. Let me just correct my notes here for a second.
If you do a couple, you'll get the feeling of it.
So you're plus 1050, but your cost is, it seems like it's more than the premium, no?
Yeah, because that makes it a debit.
How you make money.
Well, I'll tell you right now.
Okay.
So it costs us how much?
This is a small debit. So let's see, 10,
$2 plus
11.
11, 1360, 11360. And it costs, and we get back 1050, right?
Yeah.
Total cost I have 310.
Yes.
Now, 310 is like if you put up $310, okay? Now, what's gonna happen in a month? Okay. You're gonna own the lower call, 85.
Yes.
That's gonna be it's gonna go to the 10 to 95. That's how much value is that? 85 to 95. You follow me so far?
Yeah.
That's like a regular spread, right?
Yeah.
How much money is that gonna be
10-point
worth?
spread.
10 points, so $1,000 right there. Okay.
Yeah.
Now, however, we sold the higher call is actually technically a credit spread We sold the higher call, and we sold it for 525, and we bought the $2, correct?
95, 105, yeah.
So we got how much for the 95? You remember?
Yeah, we got 525 each.
Exactly, exactly. So we're just gonna do one at a time, okay? Because we're already counting the first spread. It's gonna be because of $1,000, okay? And let's look at the cost of the first spread, and I'll tell you how much money we made. So the cost of the first spread is we spent 1360. I'm sorry,
No, we spent 1160.
1160. Yeah, and we
Yeah,
got back 525.
25. So we're
So that's a
net.
cost of what?
Let's
Do
see
the
here.
math. Do the math.
1160 minus 545,
525.
525. So we're looking at 635.
So 635 cost.
Yeah,
And then put an arrow. The first spread, the bottom spread cost us 635, and we parachute out with that 1,000, correct?
yeah,
So put equals $365 profit. Make sense?
right.
That's at a 95 price, right?
Right, I'm following. Okay,
Okay.
so if the first one became a debit spread, you've paid 635 to open it, to
Yes.
parachute out with 1,000.
Yes.
If the stock stays at 95
Yes. Or
and
higher.
or higher.
But in this case, 95.
Yeah,
Questions on that?
no, that's clear.
Now let's do the top. Okay. We
Okay,
sold we sold the 95 for 525. We bought the 105 for two.
so
So that's a
525.
credit, right?
Yeah, so 525 minus 2 is going to give us 325 is our credit.
So 325 credit.
So you're going to get 365 plus 325
That's 690. We're gonna make $690 at 95
for a
price.
310 cost.
Well,
I
yes.
mean, it's how you look
Yes,
at
so
it,
it's so it's more than double. So put 310 arrow over 695. It's more than 100% return. This is how you do define risk and define reward, cap reward. Now, you understand that so far.
Yeah.
Now let's look what can happen on the downside and the upside. On the downside, let's say it shoots down, which we don't want that to happen because we get the maximum money at 95 strike, 95 price. If it starts going down, then we're gonna start losing our premium. If it starts going up, again, we're gonna start losing our premium, correct?
Yeah.
Because if you go up, we're short and we're
So
gonna
you have
lose
a
money.
5 point buffer either way
Uh,
from the short call
I
because you're
count I count six I count six 90 buffer. Because remember our total profit is 690 at 95, correct? So can we
yeah,
just
yeah, but
average it out and say 690 higher is gonna 690
okay.
higher is gonna be a wash and 690 lower is gonna be a wash? Is that fair?
Okay, I see.
Because we're the base is a 95. So if we go south of the 95, we're gonna be losing money on the long side, and then north of 95, we're losing money on the short side. Makes sense? So if 95 pays at 695, then our break even is going to be 95 plus 695 is what?
95 would be 101.
195.
Hmm.
And then below 95 on the downside, minus 695,
So you're doing 690,
89.
690 because of the profit total. You're not
Yes,
looking at just the short calls premium as your
yes.
buffer.
We already looked at the short and long separate to get our costs and to get our defined profit. And then we
Yeah.
just use the total to give us where we're gonna break even,
So the downside, you're protected 95 minus 690,
which is what?
which is 95 minus 690. You're looking at 88.10.
Okay, 10. So here's the deal, Rainmaker. If we
Yeah.
do this, we put up $300, 310, and we do this trade. Anywhere between 88.10 and 101.95, we're in profit mode.
Anywhere between 88.10 and 105.
101.95, we were in profit mode.
Got it.
It could be on 88.10, if you go up $1, we're only $100 profit. And we at 95, we're at 690 profit, which is the maximum. Maximum is right in the middle. As we go up, we max out at 95. But and then and above 95, we started losing money on the short side. And
Yeah, but
we
gain it
break
on the
even at
105.
yes, we break even on the 101.95 maximum. And after that we started losing on the whole. And below 88.10, we started losing on the whole. That makes sense?
Yeah.
Write that down and play with some numbers. And you can get some now if you tweak the numbers, you can get like this is double your money, a little more than double. You can get triple your money on a butterfly if you do it more of if you tweak the numbers, depending on the strikes, you
Yeah.
can get triple on the butterfly. Often, a lot of butterflies are double money, but that doesn't matter. What matters is the chance of success. So if you think Roku is going to be between 85 and 88 and 105, you're going to do this trade within a month, and you'll get something. And that's kind of the point of it. The mutual fund managers will take millions of dollars and do wider butterflies. Higher chances of success, lower profit return. Because this is giving you freaking 100 something percent return. You know, that's risky. So when you go wider, you lower the return, but you're going to increase the chance of success. Make sense?
Makes sense.
Now, I want you to play with that when
Okay.
you have time. And I want to show you the Condor because I just have time to explain the Condor and we're gonna
The
wrap.
only thing I was going to ask you about this, I've also heard this word used, broken wing on a butterfly. What does that mean?
I'm not sure, but
Is that
when
like
you
breaking one side of the trade, maybe?
um you can have a number of variations of this butterfly. You
Yeah,
know,
I've heard ratios. Like I've heard
you
one
can
to
have
eight.
you can raise the upper we have a 10-point spread, real nice and even. You can raise the higher one higher. You can raise the lower one lower.
Okay.
You can do a ratio where we have a -2 in the middle and we have +1 on top, +1 on bottom, right?
Yeah.
If we have -5 in the middle,
Yeah.
you can't do 2.5 on top and bottom. So one of them is going to be
3 and 2.
a 3. And so say you think it'll
Or
go
four
up.
and one, depending on what you're
Yeah.
doing.
Say you think it'll go up. You want to have a +3 in the bottom.
So you weight the wing based on the expected move side.
Yes.
If you're
Yes.
thinking it's more bullish, you go more credits,
On the bottom.
more debit on the bottom.
On the
If
bottom.
it's more bearish, you do more credit on top because you think it's gonna come down.
Yes.
Holy shit,
Yes.
that's so cool.
So you can do +2 on the top if I think Roku's going up,
Yeah.
+3 in the bottom, and then -5 in the middle. That'll give it more of a upside.
All right, I'm gonna have to think this one over. I'll have questions.
Let me just I love it when like your mind just starts working on new idea. Um now
You got me every time. I love this.
let me just throw the Condor on you and then
Okay.
you can also work. I mean, we can do another session to
Yeah, we're
focus.
gonna need to. We're gonna
But
need to.
but the Condor is basically the same idea, except when I say iron part, it's got to be a credit. Okay.
Sorry,
Sim,
one second.
if
Say that again.
when you say iron,
Yeah.
that's gonna indicate credit. Okay.
Iron Condor
Yeah,
means
if you
credit.
say a Condor or a butterfly, that's generally always a debit. You're always doing debit. But when you say iron, that's generally a credit. And also when you do credit, you're doing a straddle on both sides.
Hold on, Big G. I'm gonna move rooms. If can you give me 30 seconds?
Yeah, yeah, that's fine. I'm gonna pause it. I'm gonna pause the recording.
This is one of the joys of having kids. They run into rooms.
So do you remember the Godric trade?
Yeah. The naked leap strangle.
Yes. Thank you. I'm
Yes.
glad you remember that. You
Yes, sir.
can think of that as a condor, but what we're gonna cap it on both sides. So we sell a put and we sell a call to get the maximum return. So it's gonna be a credit. Okay. So on Roku, first of all, we're gonna make it a little bit wider. You know what I said the butterfly has two strikes in the middle, which is the body. The wings
Yeah.
have one on top, one on bottom. The condor is gonna be even. The condor is all about the wings. Okay. The body is just the same as the wings. So you're gonna have two spreads that are gonna be separated. Technically, there's gonna be no body. It's gonna be two a straddle on both sides. Here's the example: Roku. So the stock is 95, okay,
Yeah.
which is 94 something, okay. So on the put side, we're gonna sell a 100 put 100. I'm gonna buy a 90, okay. Well, you know what? Let's make it buy an 80. With 20 points.
So hold
80.
on, we're gonna buy plus 180, put minus
Uh,
one.
hang
Okay.
on. Let me do it differently. Cancel that. Let me just do a little more reserved, a little more less risk. We're gonna buy a 90 put. I'm sorry, cancel that. We're gonna sell a 90 put, and we're gonna buy an 80
We're gonna sell a 90 put.
and buy 80. So the 90 is gonna be 310,
So wait, minus no minus 190 at yeah, you limit 310.
and then the 80 is gonna be, let's say it costs us 80 plus 80. So that's gonna be a total credit of 310 minus 80 is what, 230? Is that right?
Yeah. Wait,
So that's going to be a put spread, a put credit spread. And then we're going to go on the other side. And this part, it makes the iron is that you're doing both and you're doing the credit. So we're going to buy the 105, buy the 100 with that. Buy the 100 because it gets more money. I'm just looking at
on the
that.
call side or the put side?
On the call side now.
Call side, okay.
I'm sorry, cancel that. I'm doing it backwards. You sell the 100. And then
Sell the
selling 100
100
is going to
call,
get us can we say 330?
330.
330. And we're going to buy the 110
Hold on, so
for
sell
120. Let's just say 120. 120. So 330 credit and 120 cost is 210. Is that right?
so
210. So 210 plus 210 on the call and plus 230 on the put. Does that make sense?
so minus 100 call, you get 325 credit. And what's the plus? What are we buying on the call side?
We're selling the the 100 call for 330.
Yeah,
And we're buying the 110 call for 120.
buying the 110. Hold on. Plus 110 for we're saying 120?
Yes.
120. So it'll be 325 minus 120. What 205 credit?
I got 210. Is that fair?
Okay.
You might only get 105, but I like to do a limit order, maybe get in the middle, maybe do one leg at a time, trying to get the best, wait for the best price.
So you got a 210, 215 credit on this side and a 230 credit on the other side.
Uh did you say 215?
Or well, let's see, 325. I'm getting 205 by 325 minus 120, so 205.
So it's just 205, it's fine. So 205 credit on the call side, 230 credit on the put side. Is that fair?
Yep.
So the total credit is 435. Is that fair?
Yeah.
Now that's going to happen if the stock is again in the middle. Okay. Because
Only
we
if the
said,
stock is low.
but this way this time we have a more of a breathing room because if the stock is between 110 to our above 110, I mean below 110 on the call and above 90 on the put, That's a nice 20-point range. We're gonna make a full profit of 435. So put in 20-point range equals plus 435. Because both expire worthless.
Okay, let me wrap my head around that 1 second. So we got a stock that's at 95, roughly 90,
Uh-huh.
94, something like
Do you
that.
remember when you told me with Tesla, why not just sell the 700 call? The shit expires worthless and get $100. When you told
Yeah,
me that,
yeah,
high chance of success, right?
yeah.
Same thing with this with the Condor. You're gonna sell the call where you don't think it's gonna go. In this case, you're selling the 100. You don't think it'll go there. I'm sorry. Yeah, you're selling the 100, and you're also selling the put. We don't think it's gonna go. I'm selling the 90 put. So you think it's gonna stay between, and as long as you
The
sell those
90.
two, they'll expire worthless. The only difference is we're gonna cap, like we said, defined risk. So we have to cap both because if it does shoot up, we're screwed on the upside because now we're gonna be short. If it shoots down, we're screwed on the downside because now we're gonna be long and it's gonna be going down. So we did a 10-point spread on both sides. So we sold the greater one, which is a 90 put. We bought the lesser put below to cap our loss. Total gain of 230. We sold a higher call of 100, and we capped our loss at 110, which is 10 points. Total net gain 205. Total, when you put both together, it's 435, and then it happens anywhere between 190. Nice 20-point spread. We cash out with full return, 435.
So
That's it.
you
That's
would
the Iron
you
Condor.
you would want to do this trade basically to keep the stock within a range of your
Yes,
short call and short put.
yes, they're both the Butterfly and Condor are like that. The Condor is more wide because of the wings. The Condor has bigger wings. Butterfly is more short in the middle. That's why Butterfly is a debit and the Condor is a credit because the Condor you're just looking to like escape with time decay, all time decay on that shit. You know, if I sell a 700 call on Tesla like you suggested, I'm just waiting for that shit to decay and leave me my $100. You know, in this case, you're getting 205 on the call, you're getting 230 on the put, and of course that can always be a little bit adjusted, but that's the one we just picked, just an example.
So is there a double up or like a ratio situation with iron condors or not really?
Yeah, yeah, because you can do let's say we're building a position, right? We can do now tell me, is Roku going up or down?
I mean, it's probably going to get rejected at 100 again.
No, but is it gonna go high? Is there more chance of going higher or lower? Tell me.
Higher.
So in that case, we would put a lesser emphasis on the calls and
The short calls.
the short calls and more emphasis on the put. 'Cause you know how you sell a naked put and these stocks gonna go up?
Yeah.
Same thing. So on the puts, we're gonna go plus 3 on the puts, plus 3 minus 3. So we'll sell 3 puts on the 90 and buy puts on we'll buy 380 puts. So we'll do a plus 3 on top, plus 3 on the put side, because we think it's gonna go up. And on the call, we're gonna do plus 2 minus 2. So on the 100, we'll do plus 200 call and minus 2 110 call. So it's a ratio that's favoring a bullish. Selling the puts, selling more puts and selling less calls. Make sense?
I got you.
So the bottom
Okay.
will be plus 3 plus 3.
So it
Top will
is
be plus 2 plus 2. That's a
so it's
ratio again.
yeah. So it's uneven um debits or it's uneven credit spreads, number of amounts. How you
Yes.
get the ratio on on an iron condor, and on a butterfly, you are doing debit spreads. So you just weight the debit heavier based on the direction that you think the stock is more
Yeah.
likely to move.
Now, sometimes we don't know which way the stock is going,
So it's best to go.
Just even. Just start with even.
Yeah.
And then you can tweak it from there.
Well, then this is where the naked leap strangle makes a lot
And
of
and
sense.
and this is why, and this is what, yeah, there you go. Say
I
what
was
you want
gonna
to say.
say because you can go out much further in terms of time, which means you could get a still pretty solid premium for much higher strike away from the current price. I think you're just getting more buffer and then you're protected, right? So like if the stock and then you can close. I guess with both of these trades, you can close either side. I don't think you have to close everything together, right?
Well, ideally, you wait to the expiration because you get the full. Because you know how it spreads, you get the full amount at the expiration.
Yeah.
But ideally, you want to wait till expiration. See,
I
when
think
I'm buying a regular call or selling a regular or buying a regular put, you don't have to wait till expiration. You can literally fucking make money in 5 minutes. But if you're doing a butterfly, it's not going to move as much until the expiration. So technically, you technically want to wait till the end to get the full amount. But yeah, if it starts going up, for example, and the time decay starts happening, and you have a profit, dude, close. All by all means, close it.
and then I mean like the way I was thinking is that what we've done with the naked leaf strangles is that we have closed one side of it based on the movement, like especially after an event. If we're like the Nvidia, I remember we did the 160 and the 120. Like we sold the 160 call, we sold the 120 put. As long as this, and then we and the stock fell after earnings, so that 160 call was in a nice profit. Closed it, and now the stock's going back up again. Okay, now the 120 put is in profit.
That was a successful trade, right?
That was, I mean, I still have that 120 put because
The only thing we didn't do, I don't think we capped our
I was gonna
maximum.
say we didn't add protection on the other
Yeah,
side. So
yeah.
how is maintenance different for these? Well, obviously it's high. Well, yeah, that's the thing. I don't know. I think it's higher maintenance if you're naked,
Can you
obviously.
hang on 1 second?
Okay, yeah.
All right, so on the butterfly, the maintenance is just basically the cost. You know,
The
that's
debit.
your yeah. And then the on the Condor, the maintenance is the spread distance. So you have 10 points on the call, 10 points of put. You basically have 2,000 cost on that, and then minus add to that your credit. This credit 435. So you'll have $1,600 maintenance on this one. Six
Okay.
15 15 65. Because remember, when you sell a put or sell a call, you have to take those shares. So the maintenance is like a full amount of those share price, right? Or half if you want to do margin. But when you do a spread, your maintenance is cut into small, very small, because the max loss you can have is 10 points on the call, in this case on the call, and 10 points in the put. So that's actually your maintenance is 10 points on both sides. However, guess what? Only one side can be assigned,
Yeah.
right? So you're not going to lose on both. So you can only lose a maximum of 10 points minus your profit of 430. So the maximum you can lose in this condo is 565,
Yeah.
which is double, right? But because we're doing a credit, it just has to work that way. As long as it's between those ranges of 90 to 100, um, then we're maximum profit. And then when it starts passing 100 on the call and 90 on the put, then actually, no, it was a 20 point spread, wasn't it?
Yeah, we had
90 to 110, 90
yeah.
to, no, no, actually, it was 100 because you were selling 100, we're selling 90. So I misspoke. The best range on this one is between a 90 and 100, but that's still more range than the butterfly. Butterfly was real tight. So anywhere between 90 and 100, we get a full 435. And if it shoots up after 100 from 100 to 110, we're gonna have a $1,000 loss on that because that's a 10 point spread. We have a $1,000 loss on the call because we sold the call.
Oh,
However,
you only have 1,000 minus 435 because you still have.
yes, yes. So then count the credit, and then we have maximum of 565 loss on the call, and the same kind of loss on the put,
Yeah, I feel it.
basically.
Okay.
And that's the basic
Interesting.
butterfly and condor.
You know what I've been doing a lot? Instead of buying, sometimes if I don't want to buy the shares, or I don't want to short the shares or the call, buy the call. I've just been shorting the like selling the short call as I'm seeing it break out, and I'll usually go like a week or 2 weeks out, sometimes longer. Um, and then as it goes up, I'll just close it, or I'll just add to it a credit, um, like a
Spread it.
lower put, but that would be way cheaper now, right? Because it's like I
Yeah,
could buy.
are you checking your maintenance when you do that? Because you should be getting like a lot of maintenance back when you
Yeah,
cap it.
yeah, exactly. And then same thing with the calls, but I haven't done the higher because I just say, okay, I think this is the temporary top. I think it's gonna come down. So I'll just sell a call at the money
Hmm.
and watch it bleed down.
Hmm.
And then like it'll come up and it'll go up and then I'll be like, oh shit, I should cover this.
Hmm.
But one way to cover it is maybe buy a call a little further out to get the maintenance. But yeah, it's the distance always is the maintenance, right? For these credit spreads.
Yes.
Yeah.
So a 20-point spread is going to cost you 2,000 maintenance, and then minus your credit, you're going to get back on that.
Yeah, Fidelity's kind of lame about this, and I am looking into moving to Schwab if I can move all my positions. That was one of the other reasons why I wanted to ask you in the beginning is how do I just start fresh so I can just like move over if they won't move me over.
Can I make a suggestion?
Yeah,
Just put like 5 or 7 grand in Schwab, just so you can trade,
yeah,
and ask for the full and ask for the full Monty, and then just do some trades at Schwab, and then you can play with which one you like better.
okay,
And you can move more into Schwab if you like that. You can stay with Fidelity if you like that.
yeah.
A
Because
lot of
Fidelity,
traders have accounts in different places, you know.
yeah, Fidelity will give you for these uh strangles, it takes the full um not just the width of the spread, but also the credit that you receive. It holds that in maintenance, which is stupid.
So you have to see, what's the better deal,
Yeah,
I've heard that Schwab, which is the old TD Ameritrade. I heard
yeah,
the TD Ameritrade gives you a lot better maintenance, but you have
yeah.
to you have to test it and see what's what.
Okay. Big G, I want to thank you for your time.
Now you said you had did you say you had two payments in
I
the
think I had
chamber?
2 sessions that I never did, but I paid out. But like I said, I'm more than happy to donate. Um, and
Music to my ears, but let's just say I'll give you the 2 sessions. So
okay,
now you have one,
okay.
but hey, I never said no donation, so I'll send you my
Yeah,
Venmo.
I got you. I got you. I'll
It's
send you
just
right after.
but let's do one more to cover this again, and then I have
Yes, I
one more
want to
trade
go
I want
more
to
into
show
this.
you, but let's go into this again, and then I want you to do your homework, which is to build a couple different butterflies
Okay,
and a couple different condors, and then show us on a scratch paper what's the return going to be and what's going to be the loss and gain.
perfect. That sounds good.
Anything else?
No, yeah, just shoot me the recordings. I'll review it, and then let's just
Thank
keep
you,
this one
sir.
private. Maybe the next one we can do public.
Yeah, and that helps me a little bit. I can get more
Yeah.
viewers.
No, I know.
But if you want to do like just let me know. No issues, okay?
Yeah. Yeah. This one, let's just keep it because it was also a lot of start and stop. So we'll do the
Yeah.
next one better.
Thank you,
And
sir.
then I was gonna say, what's it called? Uh, you should definitely do your YouTube lives and let me know when you're doing it. I'll show up.
I'll do the first one maybe this month. How about that? And
Yeah.
I did get everybody in the group to come
Yeah.
also.
Yeah.
Thank you,
I think
sir.
you got to do it. All right. Talk to you soon.
Appreciate you. Okay.
Yeah. Appreciate you. See ya.